I'm about to show you the best London kill zone strategy in this video, so make sure you do watch all the way until the end so you can get the maximum amount of value. And I'll be giving you a free checklist of my strategy at the end of the video, so make sure you do watch it until the end. But let's get straight into it. So the first thing you do, you only trade within the London session kill zone, which is from 7 a.m. until 5 a.m. minute time frame, okay? 7 a.m. to 11 a.m. on a 5-minute time frame, sorry. So you need to mark out the highs and the lows of the Asian session. As you can see, we have our Asian session right here in the marked blue area, and what we need to do is mark out the highs. Okay, as you can see, that's the general highs because there's so much volatility over here. And I'm going to be marking out just a liquidity point on the lows, right? So as you can see now, I have my highs and the lows completely marked out. What I need to do next is identify which part of price is liquidated first. Is it the highs or is it the lows? So if price plays forward now, as you can see, price has gone up to completely sweep the highs, right? So we can mark this out as our liquidity point. We can maybe put a few dollar signs right here just to show us that it is a point of liquidity, right? So what we're looking for next is very, very crucial. We need to look for a breakage of structure where fractional highs / fractional lows have been swept, and then we can reinforce our market structure shift within a golfing candlestick if possible, so we can actually hit this trade, right? So what we're looking for now is an actual market structure shift towards the downside. So we're looking for a movement like this where price breaks on itself and gives us that clean market structure shift. Obviously this is exaggerated, but we are looking for something like that in the markets right now. So if I play price forward now, as you can see, there we go, we just got our market structure shift, right? And it completely swept this Asian session low, right? So it's a fractional low that's been swept. What I'm gonna mark out now is a market structure shift, and I'm gonna be explaining why I used this candle right here instead of this candle or this candle to be my fractional low. Okay, so the reason I use this candle is because there's a thing called fractional lows, right? And the fractional lows comes in a series of 3 candles where the candle in the middle is the lowest one. Right, so let me just move this over. So as you can see, the candle in the middle will be the lowest one, including the wicks, and that's exactly how we mark out our candles, right? Or mark out our fractional lows. So let's say just this is the candle information right here that we have, and price has gone up, and now it's going down, and it's gone down to completely sweep this area. We would mark this candle right here as our fractional low because it has the lowest wick out of the 3, which means this is our fractional low, right? So that's our market structure shift there. Now what we need to do is just enter our fair value gap and then enter the trade so we can hit take profit. But just before I continue with that, guys, if you want me to personally manage your account and pass your account getting you payouts like this for Alex $12,000, or like for Victor who got $2,400, just join the first link in the description, because we can help you manage your account, completely pass it and get you funded, and then we can get you payouts on payouts on payouts. Even if you don't have a prop firm account right now, we can even help you get one with a 20% discount. So make sure you do join the first link in the description, because there's only 5 spots available per day, and I want to make sure that you join and press a like, put a like reaction on the first post that you see, so I know that you came from this video. But anyway, what I'm going to be doing now is marking out my fair value gap, right? So as you can see, this is going to be my fair value gap right here, fair value gap right there, right? And as soon as you get the fair value gap, what you need to do now is actually short position the bottom half of the fair value gap. And what you're going to do is place your stop loss just above the first candle of the FVG. As you can see, this is the first candle of, you know, the fair value gap trio. And what I'm going to do with the take profit is put my take profit as a 1-to-3 risk reward ratio at least. Okay, so I'm going to put it somewhere around here. It's a 3.8, but it should be fine. So what I'm gonna do now is literally play price forward, and we'll see exactly how it runs, right? So let's say this is from here, right there. Okay, so if I play price forward now, as you can see, price has gone into our area right there, and now it's going towards the downside, right? So it's very simple, and it looks very, very good, right? So as you can see, it's going towards the downside now. It's gone down to completely smash our take profit. You can see how well structured this strategy actually is, okay? And it's because of the ICT effect. Okay, ICT has done a very good thing with structuring the strategy for us, and I've refined every part of the strategy for you to use in 2025. So make sure you do start using this today. By the way, if you want to join my mentorship to learn 2 more strategies that will make you completely profitable and have a 92+% win rate, make sure you do join the click the second link in the description and do join my Forex family mentorship. Okay, where I will be one-on-one teaching you and showing you exactly how you can become profitable within the first 30 days that you enter. But anyway, let me show you at a fundamental level how the strategy actually works and how you can use this towards your advantage, right? So let's say this is Asian session right here. Asian session is doing whatever it wants, and once it gets to your specific trading time, let's say around 7 a.m, you mark out the highs and you mark out the lows of Asian session, right? So let's say the whole thing, this is all Asian session, and you mark out your time frames as soon as it gets to your time frame, right? So you mark out your highs and your lows. Once you do that, you wait for price to actually sweep one of these 2 areas. Let's say it completely swept the lows, for example. Now once it sweeps the lows, what you need to do becomes very, very clear, right? As soon as it sweeps the lows, now you're looking for a market structure shift towards the upside, right? So you're looking for a breakage of structure just like this, no matter how small it could be, just like this breakage of structure right here, where it gives you that clear market structure shift vibe. And I'm going to be putting my dollar signs right there. So as soon as you get the market structure shift here, what you're going to be doing from here is literally marking out your fair value gap. Okay, so it should be a fair value gap that's overlapping with the market structure shift. So fair value gap, and as soon as you get this fair value gap, all you've got to do from here on out is enter your long position, right? So I would enter my long position, placing my stop loss just below the first candle of the FVG, and placing my take profit as 1:3 risk to reward ratio. Okay, so as you can see, this is a 1:5 right now. I'm going to place it at Asia sessions highs because I know that price will go all the way up and completely smash that, but you guys can do differently. Okay, so what I'm going to do now, you just wait for price to actually come back down into the fair value gap area, bounce off of it maybe twice, and then you'll see it go up, completely smash your take profit. Okay, and it will be such an easy trade from then on because this strategy is so structured. If you want the full checklist to this strategy, it's going to be in the first link in my description. It's going to be my Telegram channel, so make sure you do join that, and I'll see you inside. But anyway, I'll see you in the next video. Take care.